Let's go ahead here and share this screen. Hold on. There we go. Share your screen. Okay. All right. Boom. There we go. Let's get it, y'all. Got 1 more minute till interest rate decision, until they cut. Till they cut our rates. How's everyone's day been? You guys will choose DOD the rest of the morning? You guys will trade smart, trade safe? Let's get it. In this house echoes. 30 seconds, y'all. 30 seconds, y'all. Let's go. It's the final countdown. I think we're going to see an initial move and then probably just chill till J Powell starts speaking. So we'll be trading the next 2 hours. And here we go. Wow. What a move. What? That we saw a whopping 5 point. Now it's expanding a little. Now we're expanding a little to the upside. A little bit. We'll see if it sustains. I don't think we're going to see it. If there's nothing, oh, now we're expanding a little bit. Okay. Let's see here. 100-point move to the upside so far. 100-point move to the upside so far. Holy shit. Okay, now we're moving. Now we're moving. Now we're moving and grooving. Now the market's moving a little bit. They did cut, I believe. I'm sure they did. I mean, it was almost guaranteed. Market must have liked what it was saying, though. Market must have liked what it was saying. We literally rejected right off that pre-market high, too. Well, not quite pre-market high, actually. Let's see what they give us. Let's see what they give us. Now, let's see. As a reminder, guys, let's go check out well, my Apex dashboard is still not loading. That's crazy. So we're going to have J Powell speaking in about 30 minutes, 28 minutes. Until then, we'll see if we can get any 5-minute confirmations for trades. If we do, I'm open to taking more. I'm open to it. That doesn't mean I'm going to, but I'm open to it. If it fits DOD, I'm open to taking it. How's the last few hours been for y'all? You guys all trade smart? Holy shit. Just big old sell off. $665. I would say I would look for a move back up to, like, if we close this lower with this wick, I'd look for a wick back up to these like previous highs for a reject, but I think we gotta wait. What direction are we going? We're gonna find out. Right now, it looks like we're aiming towards the downside. I mean, we're right back in that 15-minute range. But anytime you see a wick like this, it's very, very much so. Looks like reversal. We'll see if the wick stands. Got about 40 more seconds on this 5-minute candle. Yep, we have the speech coming on in 25 minutes, y'all. You should be able to hear the hell. Huh, you can't hear? It says I'm speaking. Huh. Yeah. Huh? Can y'all hear me on stages? Yeah, I think you might have to restart your stage. Okay, you're gonna have to restart your stage. They can't hear me speaking. That would do them absolutely no good. Like, restart your stages. They can't hear what I'm saying. That doesn't really help very much. You think I'm fine? I think you're fine. Oh, shit, GD, I can't hear a word you're saying if you're speaking. Hold on. Test, test. Yo, GD.
Yo.
Now I can hear you. What up?
What's up, bro?
What's up, dog?
What's going on?
Now I can. I had damn, someone in the live stream just called me Jdun.
That's funny.
I'm not going to be able to come back from that. It's over now. I saw you in my Raptor R. I saw you in your Raptor R. I tried to say hi. I was in my TRX. Damn, that's dope. You're lucky, though. I would have had to race you off the line and beat you.
Massive move.
Massive move. Yeah, I don't see any trade I like right now. That big wicks looks bearish, but we're buying each centimeter of it back up. So we'll see what we get. See what they give us. As a reminder, everybody, Apex is 90% off using code Jdun. This deal is insane. It's $19.60 for an eval. $19.60, which is crazy. Crazy. You can use code Jdun for payout protection, and to get this deal, you can buy up to 20 accounts at a time. Yep, $19.60 for an Apex 50K. It's insane. Appreciate you, Art of Trades. Appreciate you, bro. Best deal they've had all year. They just keep bettering them for Christmas. The market's liking whatever they said. The market's really liking what they said. How was your morning, GD? You catch anything, bro?
FOMC is really choppy.
Yep.
But I did gamble some calls before I got on here. I was trying to figure out how to get on here. For some reason, I couldn't hear you, and then it just took a while.
Yep.
But usually we get a pop for that 2 o'clock. You know what I mean? So it's a gamble, but I always try it.
Yep. I like it. Appreciate y'all being here. TikTok, as a reminder, make sure you guys hit that follow button if you're new here. I trade live every single day. We're going to be live for the next 2 hours. Hit that follow button in the top left corner. If you're looking to learn how to trade, get my exact trades in real time every day, and be a part of the #1 futures and options trading live stream in the world. We do this every day. Each and every day, baby. Appreciate y'all being here, hitting that follow button. Want to come say hi to everyone, Gene?
Sure.
Gene's coming to say hello.
Where you going? You leaving me? What's up, guys? ED, can you hear me?
What's up, bro?
What up? I miss you.
Miss you too, brother.
Come to Colorado this week. Let's go skiing.
I'm down. This week probably isn't the best week, but I'm down really anytime.
Oh yeah?
You let me know like a week in advance so I can book my flight and stuff. Yeah.
Bet Brandon wants to come too. This chair is comfortable.
Still on yesterday's high. But I think we're just going to really wait until 2:30. Just another massive move. Ruin.
see.
Do you usually come on stage with Jdun?
What?
Are you usually on stage?
Yeah.
On the,
Yup.
I didn't know that. I'll start hopping on.
What?
What?
Would you say when am I gonna start hopping on?
I said, I didn't know Jdun usually does stages at this time.
Yeah, I don't know.
Well, I'll start hopping on if he's on.
What about with me? Hater.
You're on too.
I get on at 4. I get on at 4, buddy.
Speak up.
No mames.
You mean you're gonna be hitting the baby hills?
No, I'm gonna be hitting the big hills by the time you come out here. I'll teach you though.
Damn, you're gonna leave me there?
No, I'm not gonna leave you. I'm gonna teach you.
I bet.
I'm gonna teach you, mijo. No llores. No llores. Mijo. Ready for bed. I'm sick.
I'm here. I'm chilling though. We got nothing really going on. We're rejecting this previous time yesterday on the spot. Already had a nice pump up off of data and more news and yeah, waiting until 2:30.
Waiting for the speech.
What's that?
Waiting for the speech. Compa.
Yeah.
Compañero.
Are you full for it, Gene?
What's up,
No,
dog?
I'm not trading FOMC.
You're not trading FOMC?
No. I was getting smoked.
All right. We got the what's it called? Eldorado sparkling water. Got the sparkling water cracked open for Mr. J. Powell. All right, let's see. Where do y'all think market's going to head for J. Powell? Does he pump it or does he dump it? Sparkling water should be banned. You should be banned. Love sparkling water. I love me some sparkling water. What?
Taking music down a little bit.
Why?
I don't know.
Oh, you did?
Yeah.
You don't like it, huh?
Not that song.
I love me some I love me some sparkling water. Big fan. Big fan. Yo, what's good, everybody? As a reminder, this is the official day trading stream of DOD, Discipline Over Dopamine. We trade smart, we trade safe, we stay focused, and I help you guys take the exact same setups as I do every day, teach you exactly what I look for, and help you trade with DOD. Appreciate y'all being here, hitting that follow button. And as a reminder, too, we got the YouTube and the TikTok free streams going. So if you're on TikTok and you'd like to see my full screen, you can go to YouTube and search up JDUN Trades. Jdun Trades. Make sure you guys hit that subscribe and you hit that bell icon as well. You don't want you missing any live streams. Gene, you're funny. That is hilarious. That's a no mames, huh? Gene is no mames.
I need some chicken noodle soup. That's what I need.
Should we get some pho? You and I get some pho? Want to go on a pho date? Genie Beanie, Gene the Bean.
That sounds good, actually.
Gene will only be going by Gene the Bean from here on out. Gene's the final boss, the final burrito boss.
I want a burrito.
Gene is final burrito boss.
Maybe a burrito for dinner. Gerardo had burritos without me the other day.
What's the first thing I say to Gene when he gets out of the shower? Hi, Gene. Get it? Because, like, hygiene, cleaning himself. Like, hi. But, like, hygiene. Hygiene. You guys get it? I thought that was funny. I made that up off the top of my head, and ain't nobody laughing. All right. I'll remember that the next trade I take. We'll remember that. Oh, I didn't even tell the Discord. I tell the Discord that joke. I gotta tell. I was muted. I was muted. I just told y'all a hilarious joke, and it was muted. I was like, damn, no one's laughing. I said, what's the first thing I tell Gene when he gets out of the shower? Hi, Gene. Get it? Because, like, hygiene, like clean. But, like, hi, Gene. Hygiene. I thought that shit was hilarious, all right? I was cracking myself up. Bro said, why are you with Gene in the shower? That's the bigger question.
Yeah.
That's the.
Thank you.
Bro said put it. What did you say? Bro said put it back on mute. You said you could have said like brush your teeth, but no, bro chose the shower. Oh, y'all crack me up. I literally can't. I literally can't. You got a feeling? All right. Eugene, look at this. I just handed you my phone through the deal. It's kind of cool. From Lifetime. Ah. Something. All right. Let's see what they give us here.
I'm bringing some food water to your house tomorrow.
Hello?
What's up?
Oh, there's Brendan.
Oh my gosh. Who let Brandon in here? Who let this guy in this deal?
Brendan.
You guys hear me?
Yes, I can hear you. Oh, you can't hear us. We must tag Brandon until we can hear him. Hello. Hello, hello, hello. I can hear you. Oh my gosh. Y'all can hear me on Discord, right? Yeah. Brandon can't hear me. Sending out an SOS. All right, we got 3 minutes. Are we playing the meeting or not? I'm putting out a poll. This is the final boss of polls.
I can hear everybody. I don't know if Brandon can hear me or not. All right, let me try.
All right, guys, polls up. And the admin trading floor if you guys want the meeting on voice or not. Damn, yes is absolutely crushing. The no's, if you're a no, you better figure it out. Y'all are getting obliterated. What's up, dog? You can hear us now. You fixed your speakers, rookie.
Come on, bro. Got that. Look at you.
I guess we're listening to FOMC elevator music.
TSM.
What?
Did you see TSM?
Is it nuking? You've been killing the swing trading, bro. You've been killing the swing trading.
focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated.
Oh, whoops. Sorry, guys. Hold on.
Today, the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate.
I'll try something real quick.
I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak.
It doesn't sound good anymore.
The temporary shutdown of the federal government has likely weighed on
I need to get out of my computer speakers. Let me see if I can switch the speaker.
effects should be mostly offset
Hold
by
on.
higher growth. Reopening.
Oh, actually, I know what.
Projections, the median participant projects that real GDP will
It was
rise
good before.
4.7% this
It's
year.
just hard to do with my
And
phone.
2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and the job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well.
I'm not speaking. That's why you can't hear me.
In a softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services.
No.
Near-term measures
That
of
orb in the
inflation
5-minute
expectations
paid.
have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal
This would have been nice right here.
percentage point to 3.5 to 3.75%.
Would have been real nice.
In the near term, risks to inflation are tilted to the upside, and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But the downside risks
Ripping.
having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a 1/4 percentage point. With today's decision, we have lowered our policy rate 3/4 percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend
Holy
toward
shit.
2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy
See
rate
if we create this
based on
fair
the
value gap.
evolving
Impulse
outlook
candle.
and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with a reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee
Didn't
judged
quite
that
get to where I'd
reserve
want to do.
balances have
I'd want to take
declined to
longs.
ample levels.
We're still
Accordingly, at today's meeting,
back and
the
forth in
committee
this
decided to
area,
allocate
but
purchases of shorter-term
I want to see a little more
treasury securities,
confirmation.
mainly treasury bills,
We're rejecting this
for the
pre-market
sole
high pretty
purpose of
hard.
maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because
My favorite days to
the
trade are
economy
after
moves to
FOMC, like the
rising
Thursday and
demand over
Friday.
time for
Love
our
trading the next 2
liabilities,
days.
including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement or repo operations are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to
See.
maximum employment, bringing
This chart's
inflation
looking more bullish than
sustainably
bearish,
under
but he could say
2%
something at any moment that
and
changes
keeping
that.
longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same
Just
page
listening
here.
right now.
The insertion of the phrase, considering
Oh,
the extent
well.
and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the
What a
adjustments in
flush.
September, bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data.
What is that background noise?
Also, I would
GD, I think it might be you.
reduced our policy rate by 75 basis points since September and 175 basis points since last September. The Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year.
All right, we looking for shorts now, Brando?
Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it is it's partly that consumer spending has held up. It's been resilient, and to another degree, it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline will be solid growth next year.
Thank you, Mr. Chairman, for taking my questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment in the labor market was really solid at that point. So what happened is over last summer of 24, inflation.
Stay patient, y'all. No trades from me right now.
We're
just letting Mr. J. Powell speak.
So we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September. We've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers.
Remember, guys, choose DOD. Just because you see these big moves does not mean you have to trade them. Discipline over dopamine, guys. Don't screw up just because it's FOMC. Wait for an A+ setup where you can define your risk.
So it is.
Everything's much higher risk right now.
Obviously, higher productivity. And some of that may be AI. It's just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the two official dissents. against a cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see?
Oh, she's got the
if things
puts.
are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned,
Like, set the bar high.
Here before,
No
the
cuts.
situation is that our two goals are a bit in tension, right? So, interestingly, everyone around the table at the FOMC agrees that inflation is too high and we want it to come down, and agrees that the labor market.
It's been good, bro. How's your day been?
Everyone agrees on that. Where the
Nice.
difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately, where do you think the bigger risk is? And you know, it's very unusual to have persistent tension between the two parts.
I'm here.
When you do, this is what you see, and I think it's actually what you would expect to see, and you do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and you know, we come together and we reach you know, a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, you know, we all have an outlook in terms of.
I have straddled in the past, but I'm not currently running any straddles.
Having cut 75.
If you manage it right, it can be a very good strategy.
Coming in, as I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see, and we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're gonna look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about in a very positive way, just given the complicated nature of the situation we're in economically, but is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once.
Remember, guys, trade smart, trade safe, and choose DOD. Just because there's moves happening does not mean that you have to catch them.
What's the timing of them?
Stay focused,
it's a very
stay patient.
Situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
What? Same thing he says always. Basically, we're waiting on the data.
Chair Powell, there's been some discussion recently in the 1990s. In the 1990s,
Tell me why I'm so tempted to go short.
did two discrete sequences.
But I'm choosing DOD, not doing it.
Point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in
It's
rates
basically a
was
coin flip right now.
up, not down.
Up or down?
With policy now closer to neutral, is it a foregone conclusion
Basically, it's a
that
coin
the
flip.
next move in rates is down? Or should
I don't
we
trade
think
coin
the policy
flips.
risks
I
as
trade
genuinely
systematic,
two-sided
high probability
from here?
entries.
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy and where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, you know, a data set of 2, now 3 is not a big data set, but you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
So yeah, I think the idea is that we're now having cut 75 basis points more now, and having policy, you know, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths. But we won't see, you know, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation. And as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but you know, we're going to start to see the data, and it'll tell us whether we were right or not.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, you know, when there's a foggy situation, we slow down, to mean that, you know, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today
Moving
rather
higher.
than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? You know, I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now
No
at
trades for me yet,
3/10,
guys. Just
from
waiting.
June through September. Payroll jobs averaging
Only trades were
40,000
earlier during
per
New
month
York.
since April. We think there's an overstatement in these numbers by about 67,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually.
Damn,
maybe just
those
a touch
shorts would
more
have gotten
gradually than we thought.
massacred.
You know, in terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story that that the goods inflation, which is really the source of the excess at this point, that almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic, heat. You know, do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall, that was the judgment that we made, and that's the action we took.
Just on the under reserves point, how concerned were people around the table about some of the tensions we've seen in money markets?
No, I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in reserves, in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant, as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $25 billion per month. So that's a small part. That's going on. It's also
25 billion per month, something like
temporary.
Something super light, something small.
Front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan though.
No, thanks. I know that means I get 3 questions, but
just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just
pumping
in my time at the Fed, and I think going back a long ways, we haven't had that in our framework. Our framework, as you know, says that when that's the case, that we try to take a balanced approach to the 2 things. We look at how far they are and how long we take to get them back to each of them back to the goal. That's very subjective analysis, really, but it just tells you you've got to. And I think ultimately what it says is when they're broadly equally threatened, so equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral, in the high end of the range of neutral, I would say, and that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, it takes, there's the announcement of a tariff, and then there's, they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't it just a one-time price increase? So we actually look at all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is, but call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this, and after that, again, if there are no new tariffs that are being announced, that will take 9 months to get fully in. 9 months is also an estimate.
I'm watching for the 750 to 730 area for longs.
And I wanted to see if I could address sort of the
It's the only potential trade I see.
Under Fed Chairman, does that hinder your current job right now?
This area in here.
Change your thinking at all?
No.
What do I see this?
No logins for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got to, when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very, that's one part of it is inflation compensation break-evens. And, they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. Break-evens are at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policies.
No longs on that pullback for me. It's not deep enough.
Where real wages are going up.
So far, that was the pullback, but while he's speaking, I won't put on that much risk.
We're going to need to have some years where real compensation is higher, is positive, significantly positive. So nominal wages are higher than inflation, for people to start feeling good about affordability issue. And
so trade smart, trade safe, stay patient.
We're trying to keep inflation under control, but also support the labor market. And
no new trades for me. So just letting him speak, and once he's done, we can see if we get a nice setup.
trade we will go. Just to follow up on that, I mean, this is now the third time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the survey showed that
I was looking for a pullback to like 750 to 730
we will deliver
for
2%
longs.
inflation.
The area I have
It's
circled
complicated and unusual,
down
difficult
here.
situation where the labor market is also
That's the only
under
place I'd put on
pressure,
risk.
where job creation
Other than
may
that,
actually
I'm
be
good.
negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But you know, it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and you know, we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low twos, right? So it's really tariffs and that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and the risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, then rates would be higher, as they were for more than a year. You know, we didn't have to worry about inflation. Sorry about the labor market, because the labor market unemployment was very low. If you remember when inflation was very high, there was a labor shortage, and so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability, and the best thing we can do there is both to support economic activity, but also, you know, make sure that when tariff inflation goes down, disappears, inflation lands around 2%.
Thanks so much, Elizabeth Scholzny with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody. They have a survey, and there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that's exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and you know, that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's demand. Labor supply has also come down quite sharply. So, you know, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, you know, pushing down on job creation with our policy.
When we're talking about supply, we've seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But you know, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low. If there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up, but you really haven't much. So it's a little bit curious. But longer term, though, the question is, what are we going to see here? And we don't know, but it's, it may be that in past technology, really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Thank you, Chair. And the current Human Reviews, given the breadth of views on the policy committee, why is there such a division of views between
the policy what?
On the committee?
Thank you.
Why is there such a division of views between the presidents and the board members?
It's not so stark as that. There is depth. The views are more varied in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing in terms of growth and inflation? Thank you.
I really don't know. It would depend on. It would depend on a whole bunch of things we don't know. So, can't really help you there.
Can't help you, bud.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people who are at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. And what we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak with these rate cuts that we've seen. Is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? The average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges, and I don't know that a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low rate mortgages from the pandemic period, and they kept refinancing and got the really low. So it's made it expensive for them to move. And we're a way ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem, and really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address a secular housing shortage, a structural housing shortage.
Thanks, Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk inflation is pretty clear to see, and that is, we see higher inflation. As I mentioned, most of the inflation over target is from goods, and we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now?
No trades for me yet, guys, for
FOMC.
FOMC.
Either that
Didn't get the pullback I wanted, so I did not trade.
Be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you'll see you see that. I think the other possibility is less likely, and that is just that the labor market gets tight or the economy gets tight, and you see just traditional inflation. I don't see that as particularly likely, but so I think again all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've gotta make an assessment, and this is the assessment we made.
Hi, Chair Powell, Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or...
All right, I'm over this meeting, guys. It's time to end this shit.
How much is that driving the higher GDP projection in the SEP?
Anyone else?
So yeah, I mean,
come on. Wrap it up, J. Powell.
I see a time when we had 5-6 years of 2% productivity growth. This
Wrap it up, Powell. Come on.
And it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs. So it could have productivity implications while also having social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. The pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control, coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what, and it's, you know, I don't have time to think about the bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Mark, for the last question.
Chairman Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked, while key borrowing rates remain
All right, Chief,
elevated.
time to wrap this
As we
meeting up.
discussed here, as many Americans struggle with liquidity or emergency savings.
Bro's gonna drag
challenges.
this out
Is
to
that
market
just
close,
collateral
huh?
damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, you know, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave, sort of every large economy in the world. So every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and you know, people are innovative, they work hard, and so you know, all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
Oh, thank gosh! What a long meeting. Felt like that. Literally felt like it was 3 hours long. Literally. I feel like that felt so. I feel like that felt so freaking long. Just me? All right. Did we all choose DOD? Did we all trade smart, trade safe, and stay patient and not do anything silly? Now we're back in action, baby. Now we are back in action, and we got 37 more minutes of DOD together. You missed the whole move. I didn't miss shit, G. I made 2 racks this morning, live account. Why would I care about gambling on a move up? Sure, you made money, but ultimately you likely gambled during him speaking. You know? He could say something make it go up. He could say something make it go down. So I'm chilling. Made 2 racks, almost 2 racks, not quite, but 1,900. Live account. 2 racks a day keeps a lot of life's problems away, especially with no stress. Calling out bangers for Team Bull every day. Take me away to NASDAQ's place. All right, let's get every day trying to get dough. We'll see what they give us the rest of the day. I still will watch for that pullback down to pre-market high. I'm still open to that. No, waking up every day trying to get dough. Oh, and now we wait and stay patient. If we see some aggressive, hello. Why are you calling me during trading hours? Hello, this is Jacob, and I want you to do one thing for me. I want you to do discipline over dopamine and trade smart and trade safe and stop calling me during trading hours. Thank you and have a very, very good day. Discipline over dopamine. Goodbye. These freaking people, man. People just love calling me. So I keep D&D on. Name the waitress I could see. Yo, as a reminder, Apex's website is back up and running. 90% is live. 90% off is live, meaning you can get a 50K eval for $19.60. And if you pass that eval, your all-in cost is another $60. So $84 total for a 50K eval. That's if you pass. If you don't pass, it's only $19.60, less than $20. 90% off is back, guys. If you've been looking to trade futures with me, this is your chance to trade with Apex for cheap, for dirt cheap. You can use code Jdun. I like the 50Ks. I'll put the link in the YouTube chat as well if you guys want to tap in there. Get yourself an eval loaded up. You can have up to 20 at a time. I recommend when it's 90% off, buying as many as you can, only if you're going to be more aggressive and if you're going to trade smart, trade safe with them. I'm not saying to link them all together. If you can't pass one, you probably can't pass 10. But if you have a set system where you can be a bit more aggressive and it takes you, say, 5 evals to get one funded, then, you know, that all-in cost for you is going to be like $160 for a 50K. That's with 5 tries. Just saying. Like, that's how I look at it. I don't like to take weeks on evals. On funded, you should take lots of time, but evals, it's, you know, you're kind of wasting your time taking 3 weeks a month on an eval, in my opinion. You can pass it in 1 day. Yep. They're a 1 day pass. You can use code Jdun, 1 day pass. You'll get payout protection. I teach how to pass every day. Going to use your code. I appreciate y'all. I appreciate you guys always using code Jdun. You know we're on the same team here. We might take a trade if we get my level. You guys got to understand with my stream, I don't just sit there and take trades to take trades. I take 1-2 trades a day. I took a nice trade earlier. If you took it, you made money. If you didn't take it, well, you learned from it. Yep, JDUN is the code. It's the same prop firm that I got a $50,000 payout from. Apex is 90% off. Yep, you go to apextraderfunding.com. You use code JDUN. The ultimate DOD code. Pay done. That's what the code should be. Should be P done. That sounds like peed on. I don't want to sound like peed on. I don't want to be peed on. No diddy. I take A+ setups. Yep.
So what's up, T-Bull? How we doing?
What's up, bro?
What's up, bro?
How you doing?
Good.
Take any trades today?
One earlier.
Choking on something. Nice. You're ridiculous, bro. You are absolutely ridiculous. To me. Where's who, what, where, when, why at? I don't know where GD is. I haven't heard him in a bit.
I am here, don't worry.
GD's vibing.
I am putting in that work.
Bro's here and he's vibing. Yeah, what's gold doing? Yeah, gold's really moving today. I like that pullback to like 42.50. I actually really like that area for pullback 44,250. Looks great. Bro State's been here a week, hasn't heard a trade. I'm like, well, are you blind or are you deaf or are you both? We don't offer trades in Braille, not yet. We're working on it. Don't. You don't actually have to have collateral for 50K. It's just called a 50K, but basically you're buying drawdown. I like the 50K accounts because with Apex right now, they're only $19. You can get a 50K account. You can start trading futures for literally $20. If you want to copy trade multiple on Tradeovate, you can copy trade multiple. You can copy trade with Apex up to 20. Literally just yapping. Yeah, this is my stream. Of course I'm going to talk. I called you a winner earlier. I think the 300K is more, but honestly, I wouldn't recommend the 300K. I'd recommend you go with the 50K or the 150K. Oh, I was like Trump's yapping. Okay. What's Bitcoin doing? Moving? I've been buying. I'll go buy more. $2,000 worth of Bitcoin. Boom. Buy. I don't own any XRP. Should I own some XRP? Should I be buying XRP or no? I don't own any. It's only $2. Fine. I'd be foolish not to. I don't own a single bit. Want me to buy my first bit of XRP on stream? I'll do it right now. How much should I buy? Should I buy $5,000 worth? 2,300 XRPs? All right, I'll buy $5,000 worth. $5,000 worth of XRP? All right. Order submitted. I just bought my first piece of XRP with y'all. Put 5 racks into XRP. Yup, let's go. I'm part of the XRP army now, baby. Just bought my first ever piece of XRP. $5,000 worth. I just joined the XRP army. Who's all in the XRP army? Where are my XRP hodlers? I don't even know anything about XRP. What? Do you own it? Do you own any? Oh, yeah. Yup, got some XRP now. J. Honestly, I just don't own any. It's like it's $2 a whatever it is, a coin or whatever the hell it is. So it's like worst case, let's say I just put 5K in. So let's say that it goes $2 to $4. I don't know what the market cap's like, but I double my money if worst case is it goes to 0. The XRP purchases DOD. Anything that has at least 1-to-1 risk reward, I'm in for. I don't know anything about XRP. I couldn't make a video of it going to the moon. I literally don't know a lot about it. But I'll join. I did join the army. I can't say that I don't own any XRP anymore. Because I do own XRP. Oh my gosh, they have a strong cult. I used to kind of poke fun at the XRP cult. Do you guys welcome me into the XRP army? Am I welcomed with open arms? Shut up. Shut up, Brandon.
Yeah, Brandon.
Talk to the board of XR of hodlers. The board of hodlers.
I'm hopping off. If you guys didn't see, I put a swing for HUD. Good old HUD. You're an OG, you know. But that is the last swing trade for 2025.
Why? No, you're not. No, we need more swings. We need more swings. Let's see here. Book. Replaceable. Let's see here. DOD, baby. You ought to really focus on DOD the rest of the day, too. I want you guys to do something positive for yourselves. Not on you. I will not be live for Asia. Gene will be, though. Inside Team Bowl. Told me your love comes true. You guys all have a good day? Everyone in Team Bowl? You guys all follow your plan? And you told me your love comes true. They'll be up on you. Made 216 today. Do you have a good day? Yep. About 2 racks in the live. depends. Anywhere from 2 to 5 minis. If I really love to set up, maybe like 6. Or micros, like 20 to like 50. I don't like doing like all 50 at once, though. You don't get the best fills. Tomorrow is a new day if you didn't follow DOD, but it's got to be a new day. Got to be new choices. Mr. Gene.
Hello.
You gonna drop me something, Gene? Oh. $15 more minutes, y'all. Guess what I'm going to be announcing in the next day or two? I'm going to be hosting DOD, The Path to Profitability in 2026, a 2-day webinar on the 29th and 30th of December. I want you guys to have the full system and everything ready to go into January 1st, ready to make money and ready to consistently follow your plan and go into 2026 confident in your trading. And it will be 100% free, might I add. This is a free webinar. And if you've ever been to a Jdun webinar, I mean, you know how a Jdun webinar goes. You guys know all the value you get when you come to a free Jdun webinar. You're getting some serious, serious value. You're walking away with time well spent and learning. I mean, I've seen hundreds of messages from people who have came to previous webinars and they go on to become profitable. They get payouts. They genuinely just do better in their trading. Very excited. So I'll have that sign up link out in the next day or two. Yeah, weekly schedule will be out next week. Just didn't get to it this week. December's just kind of off, per se. I mean, we got live trading is just automatic every day. But I got some pretty sweet plans. We're getting ready for 2026. Some pretty sweet plans for our team with DOD. Gene is still doing Asia tonight. Yep. Yep. The people love you, Gene. They love you. I'm in no way affiliated with Jdun, but when I started my trading journey, I watched his 3-day webinar, and the value is absolutely there, even if you don't necessarily run the same strategy. I appreciate you, bro. Appreciate you guys. I'm really excited to put my all into this next webinar. I'm very, very excited to get you guys ready for 2026 the right way. I'm still watching for this pullback. We marked it out earlier. That's the only trade I would take, even though my win rate kind of sucks in the last 10 minutes. The webinar will be $0.00. But you will need to commit like probably 4 hours of your time. You can change your life with this. You can change your life with everything that I teach in these free webinars, but you have to soak it in and apply it. The link to join the webinar is not out yet, but I was just letting you guys know it's going to be on the 29th and the 30th, so in a few weeks. I want you guys to have it fresh in your minds going into New Year's. You need change in your life, can't keep up with what you've been doing? Good. That's a good place for change. Real change comes when you're sick of your own shit. I fully believe that. I lived it. I lived it very clearly. Yep, if you can commit 4 hours to me in the last few days of December, I promise you I can change your life for 2026. I mean that. No get rich quick bullshit. No pay this to change your life. Just show up, learn, focus, apply, and DOD will change your life. You've seen it happen. I'm sure there's people listening right now that it's changed their life. The sign up link is not out yet, guys. I'll have it out likely tomorrow or Friday. And we got plenty of time. It's on December 29th and 30th. So we have time. A few weeks. And it will be in the evening time. So you won't, if you work, then you'll be good. And if you get on the registration list, it will be recorded as well. Though I highly, highly, highly recommend you attend live. This morning, following the one trade, you made money. Good. Got to tag and post your gains. Nice. Truly, Jdun, the content of you surprising people with money and the education you give on the market and this lifestyle is appreciated. Just wanted to say thank you, my dude. Appreciate you, Tyler. Much love, bro. I appreciate you watching and supporting and being a part of this community. It's never taken for granted for me. Anytime you guys join Team Bowl or tune into a live stream or anything, I know that your time is valuable and I genuinely appreciate it. I hope that DOD can help change your life and can help you live better and help your family better and live for a living. Too many people just survive. They exist. I don't want you guys to exist with DOD. I want you to live. My focus is to help as many people live for a living as I can in 2026. That and the 50K payout on Apex. What's my code for prop firm? It's code JDUN, all capitals. Right now, the two best deals are Tradeify's 40% off ends tomorrow for their select accounts. Those are the ones with daily payouts. If you could pass a 3-day eval, you can get daily payouts after 3 days, which is insane. Or Apex's new sale that ends in a week is 90% off. It's only $19.60 for an eval. You can use code Jdun there for the 50Ks as well. I don't recommend the bigger accounts. The only bigger account I recommend is 150K. But honestly, 50K is cheaper and it'll give you a better edge as a trader. You're looking to gain more experience and have a better chance at a payout. So yep, Tradeify. Tradeify's sale ends tomorrow, and it will end tomorrow. They'll still have a sale like 20 to 30%, but it won't be under $100 anymore. I know y'all like some deals, so you want a deal, go walk in yourself a few Tradeify select accounts. You just got to promise me that you'll choose DOD. Got 4 minutes, y'all. 4 minutos. Nothing, just going down a little bit. Not enough for me to take a trade. I think tomorrow is going to be a good trading day. I'm pretty excited. I always like the day. I like the 2 days after FOMC. I'm a fan.
I think we can still keep climbing up.
Me too. DOD is discipline over dopamine. I'm live every day in the morning as my main stream. So if you're new here, make sure you hit that follow button so you don't miss any lives. Our main stream starts at 9 a.m. Eastern time. So 30 minutes before New York Open, I typically trade for 2.5 hours. Yep. So make sure you hit that follow button. If you'd like a bigger screen, the TikTok algorithm is great for showing us new people and expanding our community. But the best stream, in my opinion, is on YouTube. So it's Jdun Trades on YouTube. I'm live there right now. You can go check it out. You get full screen share, and it's just a more focused stream. TikTok can get kind of crazy sometimes, but the algorithm is amazing. It helps us expand our reach. It helps grow our community, and it's helped us maintain being one of the largest trading communities in the world, which I think is pretty cool. I think it's very cool. Grizzly is? I do have Twitter, but it's Jdun Trades. I'm not really super active on it. If you want to message me, do it on IG. That's where I answer DMs is on Instagram. It's my most active platform and my fastest growing platform as well. A lot of good stuff on there. But all right, y'all. Let's see. The market is about to close. Hopefully you guys made some guava with your boy today. If not, regroup for tomorrow. Choose DOD. Trade smart, trade safe. We will be live tomorrow morning at 9 a.m. per usual. And I wish you guys the best in the rest of your evening. Do something positive for yourself. Do something challenging for yourself. Do something uncomfortable. And focus on becoming a more disciplined you, inching towards 2026. God bless y'all. Have a great rest of your night. Thank you for being a part of Team Bull. As a reminder, that Tradeify deal ends tomorrow or ends tonight, and it will go down. So there will be a discount, but it won't be 40% anymore. So if you guys want access to that less than $100 eval that comes with daily payouts once you pass, you can use code Jdun on the select 50Ks for a $95 eval that grants you daily payouts once you pass. That ends tonight. Last warning. It was their launch sale, and 40% on those is insane. They're pretty much probably breaking even when it's all said and done. I get what they're doing. It's a good move long term, but It's definitely in the trader's edge. So God bless y'all. Appreciate you being a part of Team Bull, and I'll see you guys in the morning. Bye, everybody.